boy, here we are again. It's been a while, a couple days, really, not too long. About 4 days, but I've been working on the community, on the Discord, doing a lot of things just to enhance your knowledge absorbing and making it easier for you to learn. Okay, anyways, enough of the app. We're going over lack of displacement. Now, what in the world is lack of displacement? I've heard of the word displacement, JJ, but what in the world does lack of displacement mean? Well, if you don't know what the definition of lack is there's none of something. So if you put lack and then you say of kindness, lack of kindness, that means you have no kindness. And in this case, since we're talking about displacement, it'll be lack of displacement. So there's no displacement. What this will look like in the charts is there's no displacement. Price isn't going as it should, okay? Because with displacement, the definition of displacement is price moving fast while creating fair value gaps. That's all it is. That's all it is, okay? And that goes for any time frame. But when there's a lack of displacement, that means price truly doesn't want to go anywhere. Now, this confluence is big. This is a huge confluence. And the reason I say that's because I got cooked today by not using this, or I guess you could say eyeing this confluence. Now, some people, in some cases, what price would do is it'll have a lack of displacement. It'll like time distort for a little bit, and then it'll, displace in the direction that you want it to go in. But in some cases, just to keep you safe, be cautious of price not wanting to displace. We're going to go over some examples of this. Let's just jump straight to the 1 minute because there's a lot of back and forth movement. Okay, so let me go over the trade that I took wherever that trade is. Okay, so right here, first we're going to go over the trade that I took. Let's minimize that, which was right here at this fair value gap right there. Do you see it? Where's it at? Fair value gap. Okay, so right here, right? I saw this order flow entry drill right there, and I was like, oh wow, let's long off of that. It's respecting this fair value gap, and then we had displacement previously, so we're finally leaving the consolidation range, and I was like, oh, okay. And then we got relative equal highs up here, and I was like, oh, okay. Then we got more relative equal highs up here, and I was like, oh, okay. We might really want to go higher, so we're not gonna argue with it. That's exactly what I said. I'm like, I'm not gonna argue with it. I get in, and I'm like, bro, why does the market literally stop? Every time I get in, it just stops. The market just is like, nah, I'm good. I was just kidding. They thought I was going higher. What? Literally, the funny part is that literally when I got in, the market stopped. I got in on this candle. Right there, it stopped. That's the hilarious part. As soon as I got in, look what price did. It didn't go nowhere. So this is lack of displacement, okay? When you expect price to deliver, but it's not doing it, okay? Or when you expect price to displace and it's not doing it. That's lack of displacement. Now, this can mean two things. That price is either going to retrace, okay, and then displace in the direction that you want it to go in, which is still you should get out and wait after the retracement is done. Or what price is going to do is time distort. Okay, it's going to time distort and then go higher. But in this case, there's a big difference in lack of displacement and time distortion. Because this is time distortion, yes, but what type of time distortion? It's going higher, breaking highs, resting lows. So it's going higher, and we have a lack of displacement going what? Higher. So that means price does not want to go higher. You get what I'm saying? You do understand what I'm saying, right? But if we really say it's time distortion, price will be purging liquidity both ways. Just purge, running through all PD rates. That is real time distortion. This is still a time distortion, yeah, but it's a upward curve. You get what I'm saying? So that's why we can call this a lack of displacement, because we initially had this displacement here, right there, right? And then zooming back in here, we have a lack of displacement going up, purging highs, and have lows resting down here. So price is like, okay, I don't want to go up right now. I want to go lower. It's either going to use this consolidation to reverse, or it's going to use it to retrace. So it could be AMD, or it could, which is power of 3. It could be power of 3, or it could simply just reverse. And if we look, yeah, it did. It really did. Yeah, it really did. You get the point. It really did. So I did obviously take a loss here, but I think around. It was some crazy spike lower that I don't know where it was, but it was some stupid. Yeah, this right here, this candle. Yeah, this candle right here started spiking, and I was like, oh, whoa, what the world is this price action? I was like, right around here, something like that. But it shot lower, and I'm like, the world is going on? And I see this bearish order block. I'm like, okay, it might want to recover. I'm already down like couple dollars, and so I'm already down in drawdown, but is it going to respect this order block? And no, it doesn't. So I'm like, okay, it's disrespecting the equilibrium, so I'm out. That was negative like $50, okay. But yeah, if I would have got out up here when I first saw this lack of displacement, I saw it. It was right in front of my eyes. Like when I was in the trade, I was like, okay, price isn't going anywhere. What's going on? Like I literally said that directly to myself. Like, matter of fact, there was other people in the call with me inside of my community. I literally said that, and for some reason, lack of displacement did not pop up in my head. But if I would have noticed this and saw, oh, it's not going anywhere, it's having a lack of displacement, I could have got out and maybe made a little bit of profit, like $2, because it's like break even. Well, yeah, basically just got out at break even, or took a smaller loss than that $50 loss. But you get what I'm saying. We're gonna go over a couple more examples of this. Okay, we're gonna just say, I don't know. Let's see. Let's do this right here. This setup right here. So let's say we take this. I don't know. It could really be anything here. You could take this break in market structure once price breaks above that high right there. You take that fair value gap, it goes higher. We can mark that fair value gap too right here. Price goes higher, but then you're like, okay, I'm in drawdown. Now I'm back in profit. Okay, it's not going anywhere. And you're like, I don't know. It should have went somewhere by now. And then you're like at the end of a macro too, and you're like, it's the end of a macro. It could have started moving, but I don't know which direction it's going to move because it's not going anywhere. So you're like, nah, I'm just going to get out. And then when you get out, you're like, whew, I'm glad I got out because price just, it begins to dump and dump and dump. Okay, so let's go over my mistake. Let's see what I could have done and made some money here. Let's take a trade in hindsight, shall we? So we're gonna go ahead and get rid of this and go ahead and start from the lack of displacement. So we're like, okay, lack of displacement is going on, so it doesn't want to go higher. Okay, price seeks out these lows right here. Boom. Now we got what? A run on sell side liquidity, and then we got this fair value gap here. That's been what? It's been disrespected. That fair value gap earlier is getting completely ran through. So that's going to turn this into a what? An inversion. Wow. So the bullish roll that this fair value gap once had, it is now a inversion, okay? Because it's been inflicted a bearish roll on it because it's completely been ran through and disrespected, okay? Not ran through like that, you little weirdos. But yes, it's been ran through, okay? You get what I'm saying. Price has a purge of liquidity up here. Let's say we got out of that trade way earlier. So now like, okay, we're going to take the reversal if it begins to do so. We start seeing confluences. We're like, okay, liquidity purge. Okay, it's not going through the high. Okay, it might be going lower. And they're like, oh, wow, it is going lower. Look at that. Wow. Okay, it's going lower. Seeks liquidity, then comes into the rest of this undelivered fair value gap. And we're like, wow, okay, it might actually be wanting to go lower. We can cook here. And then we see this volume imbalance. We could have took a fair value gap here. We jumped to the 15-second, look for something like that. But in this case, there isn't any fair value gap for a break in market structure setup. So we're going to use this volume imbalance for our imbalance, okay? Price comes up to the imbalance. We pull this over just a little bit. Comes up to the imbalance, and look where the bodies close. Do you see that? Look where the bodies close. As a matter of fact, you want to see something even cooler? Want to see something even cooler? Watch this. Oh my God. Whoa. Want to see something even cooler? Do I have to keep zooming in so you can be like, so you can see? Well, you see that, right? See that? I know, it's amazing, isn't it? Truly amazing. It just stops right there at the equilibrium. Really nice, isn't it? Yeah, I know. It's truly amazing. But if I want to pull this out like this, you really want to zoom in? Sure, let's do it. Oh my God, I keep zooming in. JJ, how's it so perfect? The world? I keep zooming in. It's there perfectly. What? How is that possible? I don't know. Ask the algorithms. I can't, bro. I pulled it in so much I can't even pull it down. Holy crap. Okay, now I can pull it back. Dude, you can probably hear me clicking my mouse like 17 times trying to pull that back in. But yeah, you get the point. It respect the equilibrium of that volume imbalance, and then it begin, rushing lower off this. So we're like, okay, we're not even gonna hesitate. Boom, we're selling right there. And let's say we get a late entry just to make our odds even worse. Let's say we get in, I don't know, like right there. That's our entry. Then we set our stop at the top of the candle that the highest high of those two candles that create the volume balance, which is right here. Okay, so that's the stop. Where are we gonna target at? Do you know where in the world are we gonna target at? First, let's go ahead and deviate. Let's deviate, shall we? So we're gonna go from which swing should we do? I wouldn't rather do this swing, honestly. I really wouldn't want to do that. I mean, I could, but I would rather do this swing to this swing and then deviate that lower. All right, so let's see where this lands, shall we? We got the 2.5 landing right at these equal lows. See that right there. And then guess what? We got the 3.5 landing at these equal lows also. And then what else do we have? We have the 5.5 landing all the way down here at this short-term swing. So that short-term swing could be good. We got all these lows down here that's accumulated. No, those are all below the 4th standard deviation. So the 4th and the 5.5 is good. Why did I mention the 5.5? Because there's relative equal lows, one, so price is going to have a run on this side of liquidity. And then there's a short-term low. Are you listening? Get closer. Just a little closer. Are you listening? I said short-term low. Do you know what that means? It means that price can come to it anytime it wants to. Now, if it was intermediate, then that's different. Or if it was long-term, that's different. But in this case, it's short-term, so I can go to it right now. And if we look, price goes straight to it, and you already get it. It's amazing. So if we target all the way down there to that 5.5 standard deviation, oh my god, 22 risk to reward. That's so unrealistic. You have to change that, JJ. Fine, I'll change it. Let's make the stop bigger. The viewer doesn't think it's real. Hold on, guys. Let's move it up to... I'm starting to look. I'm trying to move it for you, and there's like literally no other place I can move it. If you want to really look here, there's nowhere else I can move it. Because it already used this breaker. Price already used this order block, so those two are exhausted. There's really nothing else you can do here. Unless you want to just set it all the way up. Oh, well, my bad. If you want to just set it all the way up here, you could do that and still get a 7 risk to reward, which still might seem outrageous for some people. But there's really no other good and safe place for me to put it, because even this order block here ran through. This propulsion block ran through. So there's, well, exhausted really, but this is the only logical place to put it, and that still gives you a 20 risk to reward. So hey, call it unrealistic if you want to, but these are the sniper entries I'm teaching you. I'm teaching you this right in front of your face. Okay, I'm teaching you this. Okay, this is not hard. This right here is not hard. Okay, it really isn't. You probably got an SMT up here. If you want to go over all the confluences, it's not a lot. Okay, and mind you, this is internal range trading shifting into external. This is not hard. You want to go over it real quick? Let's go over it. I don't know if we do, but there might be SMT up here. I can check. Let's see. Let's go back to wherever that thing is. Okay, ES. Is there an SMT? Where is that dump at? Yeah, matter of fact, there is. There is an SMT between these two highs right here. And if you want to see proof, I'll show you. Maybe like pull it over here or some sort, whatever I can do, and shift between the two. Oh man, why is it not doing it? Oh, I gotta put it on auto. Ah, my slow self. There you go. So you see those highs up there where the liquidity purge is up there? You do see that, right? And you see this high right here? Pay attention to that. Pay attention. Now we're gonna switch to the ES. You see that, right? So there's an SMT right there. That's one. There's an SMT. That's one. Second is that we purge all these relative equal highs right here on the NQ. Then right here we have a lack of displacement to go higher. So what's that? It's 3 confluences already. It's not a lot. It's 3. You're probably like, oh, that's way too much. I'm done. I gotta switch to retail. I gotta use candlestick patterns. I can't do this. It's too much. Well, sorry. That's all I gotta say. Sorry. But then we have another liquidity purge here. That's 4. And price begins to disrespect this fair value gap here. That's 5. Then price comes back up, respects this volume balance to the equilibrium. That's 6. And 6 confluences to get a 20 risk to reward. I think that's pretty yeah. Yeah, you already, it's pretty, yeah, very pretty. Do I even have to say anything? It's a very nice trade. So if you complain about this, even though I'm teaching you this, then hey, that's nothing on me. If you want to calculate that real quick, let's calculate that. I hate that I always click. I see, look, there's a button, right, on my keyboard. There's F12, and then there's F11. F11 makes things, makes my screen full screen, right? F12 is like a panic mode button if you're like watching porn or something, which I don't do that. But if you click this button, it immediately switches you to another tab. I just press that, and I almost do that in every single video, and I have to cut it out. But right there, I'm not going to cut it out, okay? If we pull up the calculator, right, And let's say if you're on a funded account, right, and you risked, I don't know, 1%. You made 20% on the funded account, bro. If your funded account was 200K, you made how much did you make? 40K? You made 40K, dude. And if you were on the live, right? For example, let's say you risk 5% per trade, because since you're on the live account, right? If you risk 5% during that, and you say 5 times 20, let's see how unrealistic this can get, guys. That's 100%, dog. You doubled your account in one single trade. This is not unrealistic. You just have to pay attention. This is not something that you should be afraid of achieving. This is not, no. This is easy. I'm telling you, this is easy because I've done it, and I'm gonna be showing proof of that. We're gonna be doing live lectures in the future and taking trades live, but I'm not gonna be showing my trade execution so you can copy me and be like, oh yes, JJ, keep giving me those signals and make me profits so I don't have to do any work and not work a 9 to 5. No, you will be trading on your own. Sorry, but you will be trading on your own. But this is very realistic. This is very, very realistic, okay? If you want to make it even more realistic, fine. 7 risk to reward. That's fine. But if you want to get that nice precision entries that I'm teaching you to get, 20. Hey, calm 20 or 100% on a live account if you're risking 5% per trade. Hey, that's dubs. I'm not gonna lie. That's pretty cool. Am I wrong? Hey, this was dope. Like, I don't care what you say. This was a nice trade. And I can't believe I even made that mistake to not see that lack of lack of displacement. If I would have saw that, boy, I would have made killer on the day this is being recorded. Boy, that would have been crazy. That really would have been insane. But even in conditions like this, I'm gonna tell you something. Even in conditions like this, like I taught in the pre-market video, this is predictable. This right here, you can predict this. You can predict this with opening range gaps, in which I haven't taught yet. And you can predict this even with economic events, I think. Yeah, I'm going to teach that soon, but you can predict it with economic events, which is really not hard at all. Because, for example, if the economic event comes out, or if you know economic events have large volatility, price has to accumulate and build up orders so it can deliver that large volatility. It's just common sense. It's nothing crazy. For example, if you're getting ready for a race, you got to breathe, you got to eat, you got to drink, you got to prepare. So you can run that marathon. It's just common sense, okay? You get what I'm saying? But this would have been my trade or our trade if I wouldn't have made that mistake, which is not seeing that lack of displacement up here. And that's really it. That's lack of displacement. It's nothing crazy. This was kind of like a lecture. You definitely learned a lot more than just lack of displacement here, honestly. You probably learned to trust the market more due to you seeing this trade here. But hey, you definitely learned a lot. I'll be in this video here. This is the end of lack of displacement. I hope you learned a lot. I hope you absorb it, and I hope you can use it within these rigged markets. And I'll be in this video here, and I'll see you guys in the next one. And I'll be in this video here, and I'll see you guys in the next one. Good luck and good trading.